We're halfway through 2025, and in today's video, we are going to talk about how the markets have done so far with a couple of takeaways for long-term investors. Okay, let's bring up a chart. Here we are starting in January all the way up till the end of June. And where we've landed up to June 30th is the markets are up a little more than 5%, which is this green dot here. Okay, great. We started at zero. We're up about a little over 5% midway through the year. This is actually a pretty average rate of return for the S&P 500, even a little better than average. And so we've got these two dots in the beginning in January and at the end in June 30th, the first two quarters of the year. Let's talk about it. And really the takeaways here for long-term investors is what has happened between these two dots, because it has not been just a straight line going from zero to a little more than 5%. This is the line that the stock market has taken during that time period. And so as you can see, we went up a little in the beginning, and you might recall we had a very big drop in the middle and then a record-making comeback. And here we are to what is about an average return, but in the middle, this didn't feel average or it didn't feel smooth at all. And let's not just look at the chart, but all the news that has come out during this time period. So all of these headlines that if you were paying close attention, not saying that you should, but if you were, this is what you would have seen. And if I were to just show you all these headlines and say, would you like to invest in the market given this current state of affairs? Many would say, absolutely not. This seems like way too much. I'm just going to sit out. This is way too risky. And here we'd be with what was a volatile experience, but an average to above average rate of return in the market. And so in particular, in this market, this is the US markets. If I were to give you these headlines, many of the headlines and many of the worries have been around this tariff talk and international countries being widely exposed to their biggest buyer, the US. And if the US stops buying, they're gonna have big problems. So tariffs have been a big point in the news. And what has been the best performing asset classes in the world is international and emerging markets, well outperforming the US markets. Which if I just gave you the news, you would find that hard to believe. Which brings us to where we are, which is even if you knew the news, right? You can't build an investment portfolio around the way that you think the market is going to react because no one knows how the market is going to react. And paying attention to the news on a short-term or even a medium-term basis, unless you're doing it for enjoyment or unless you're just bored, doesn't really do you any good. And so as long-term investors, one, I would just say, if you can, just don't pay attention to the news because it's not going to do you any good. But in particular, when you're building your portfolio, build a portfolio where, as I've always said, know what you own, know why you own it, that it's aligned with your goals and the risks that you're willing to take, and then many times just leave it alone and go enjoy your life. And I think this first 6 months shows exactly the reason why. You can have average rates of returns and a incredibly stressful experience if you're looking at it on a day-to-day or week-to-week, period. And that's not the way that long-term investing works. And so, more than anything, as I just mentioned, know what you own, know why you own it, align it with your goals, and then ignore the news. I hope you found this helpful. And as always, thanks for investing your time with the Personal CFO.